Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1209th edition of Short-Term Trading Live with Oscar. Good evening, traders. Good evening, good evening. This video is being filmed on Monday night. That would be Monday night for trading on Tuesday, August 12th, 2014. Traders, remember that futures trading can be extremely risky and can cause substantial financial loss. Futures trading is not suitable for all trading accounts. All right, so what's on the board? Traders, what I want to show you right now is that we have an absolute, unequivocal green omni for trading on Tuesday. So let's make this bad boy green and we'll go from there. So we have a green omni for trading on Tuesday. Why do we have a green omni? I am here to tell you that the gunfight at the Otapma Corral is now over. Let's strike it from the record. Boom, stricken. Gunfight at the Otapma Corral is now over. Why? Because the S&P held the Otapma, something that we were talking about for days and days on end. Now, I understand that it was building some sort of a weird bear flag, or an F flag, if you will, and the same thing in NASDAQ and the DAX and in the Dow and in the trading, so it looked very iffy. But I have shown you this chart many times over, and I said, look, from all the way back here, you get down to Otapma, you rally up and do what? Make a new high for the year. Down to Otapma, rally up for a new high for the year. Follow me. Back down to Otapma, a little bit through, new high for the year. Back down to Otapma, new high for the year. Down to Otapma, new high for the year. Getting familiar here? Down to Otapma, new high for the year. Down to Otapma. What'd you say out there? New high for the year? Then you'd be correct if that's what you said. So that's what we're looking for now that the S&P is held. So you're looking at one version, but let's go look at a few other things here because there's more. There's more things to look at. Dow Jones Transportation Average on a daily bar. Another very interesting chart. A pullback right to the Otapma. Omni Trading Academy's proprietary moving average is Otapma. We pulled back to Otapma. And let's just make this a little clearer for us. Let's put this right here so I can show you something. All right, so this line will work. So now that we're back to Otapma, what should happen next? Well, let's move back here. Two little things. Let's show you that when the Dow gets to the Otapma, the tranny gets to the Otapma, it does the same thing. Bam! What does it do? It goes up here and it puts in a new high. Okay, so we see it follows basically the same thing that's going on. Tranny and Dow, of course, or S&P, you'd expect the same. So down here, new high. Down here, new high. So we come down here, and here's where it's going to get interesting. We come down here, new high. Down here, new high. Down to Otapma, a new high should come. Now watch this. The furthest of all of these peaks to troughs around Otapma have been about as long as this distance. See the low? The low right here, the low as it got, the high when it started. Take a line and go, okay, so the high to the low, that's about it right there. So this is my size line. So this should be about what I'm expecting the market to dump from that high through Otapma and then go up for a new high. So I take this measurement, I drop it over here, and watch this. Could you ask for anything more perfect than that? It's the exact same measurement. From there, a new high should be made. Why? Because after we put this low in, a new high was made. Boom. And then it continued on. So we should do the exact same thing. Now that we have this same measurement, same drop from the high to the low, same drop from the high to the low, catches Otapma, what should happen next is the new high for the year should be coming our way. So I think we've got our direction set. Remember that futures trading can be risky, so always place stops. And stops don't always work because sometimes even stops get overran, but at least you got some form of protection in there when you place your stops. Let's look at another chart. We are not done yet, traders. There's a few more for us to look at. So we're going to look at something called chart number 13. I've got it labeled, and that's the Dow Jones Industrial Average. Now we're looking at a weekly. This is additional confirmation that the bulls are returning back into our nice bull market. Why? Because a different average now. This is not the Omni average. This is a secondary average that I like to use at the Omni Trading Academy. This one has held every time we've gotten down the Dow Jones Industrial on the weekly now, not a daily. It's gotten down under the average, rallied for a new high, under the average, up for a new high, under the average, up for a new high, same thing. But lately it only goes 1 week under the average, new high. 1 week under the average, new high. 1 week under the average, new high should come. What else is there on this chart? Take a look at this. Darken in this a little bit deeper and look at the channel you've been in. Right around that Omni average, or you've got, I mean, it's not quite the Omni average, but around one of our Omni averages, you've got the channel. Boom, the red channel it's been holding for quite some time. Top and bottom. Very interesting chart there. So that's a little bit of an explanation of why we should head back up for new highs now that we've held OTAPMA in your Dow, Tranny, DAX, NASDAQ, S&P. So another trade that we've been playing with lately was the wheat. We sold the wheat and actually held it overnight from Monday into Tuesday. And that wheat chart I think you'll find interesting. So let's go pull that. And that's right here. Look at this average and look at the wheat. This is the simple 40-bar moving average spread on the daily wheat chart. When the wheat on the daily gets below the average, right here it happens, massive break. Boom, 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 boom. Gets back up to the average. What does Oscar think it's a good idea to do? Sell. So that's what we've been doing. And we expect the market to go lower. Now, why would I want to choose wheat to go lower? Because wheat is very affected by the dollar because so many countries around this world purchase our wheat and others wheat. Wheat is priced in dollars. So let's go look at the dollar and see what's going on there. Dollar index on a daily bar. And my beloved OTAPMA, the Omni Trading Academy's proprietary moving average. So let me drop that in for you. There's a reason for this. So we've got OTAPMA. And when you look at that chart, you'll see what I'm getting at. Because without me even saying it, I think you can see it. Here's what's going on. When the dollar index gets around my beloved OTAPMA, the Omni Trading Academy's proprietary moving average, something dynamic begins. For instance, the market is under the average, drops a lot, gets back above the average. What does it do from this point when it gets above the average? Right? We can follow the little bouncing ball. Let's make one. Follow the little bouncing ball. We go up, down to the average and hold. Up, down to the average and hold. Up, down to OTAPMA and hold. Up, down to OTAPMA and hold. Once again, up, down to the OTAPMA and it holds. Up. This time you break OTAPMA. Get underneath it. What's it do? Gets up to it and fails. Boom. Gets up to it and fails. Boom. Gets up to it and fails. Boom. What just happened? Dollar got above it. Dollar strength would be grain weakness. Very simple to understand. I'll try to be quick about it. If you had something like this, a teeter-totter, a seesaw, if you will, in a playground. So let's say you've got a teeter-totter set up right here. And let's just do this. Well, not that. Let's just do this for your teeter-totter. Just make it look official. So we'll put a little stand there in the middle. All right, boom. So, if on this side we decided to have U.S. dollars, right? U.S. dollars. If we put them over here. And on the other side, we decided that we were going to put wheat because it's priced in dollars on that side. If this is a teeter-totter and the teeter-totter starts to go like this, dollar goes up, teeter-totter goes up. Imagine that. Just give me a moment, children. My apologies on that one. Okay, now that that nonsense is out of the way, sorry guys, I can't edit this. My editor did not show up tonight. It's just me and you, so you get what you get from me. My bad there. All right, so where are we? So if the US dollars are going up and the teeter-totter is doing the same thing, right? So the teeter-totter goes like this. US dollars go up, where does the wheat go? Down. It doesn't have a choice. If in fact it was going the other way and the teeter-totter was starting to head this way, then the opposite effect would start to take place and wheat would go up and the dollar would come down. But right now that's not what you have. You've got the dollar up, wheat down, and that is one of the reasons why the wheat looks strong. And if dollar continues, it should continue to knock down some commodities. And then we can look at this chart again, traders. It is the S&P. Remember, the S&P, the gunfight at the Otapma Corral is over. It looks to me like now you can trust the market will make new highs, and I think that's where we're going to go. Never trade without stops. A stop can be your best friend, but there is no guarantee a stop will work, but always use them. Traders, I will see you at livewithoscar.com. Always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are emotions are out. Traders, thank you so much, and I will see you at livewithoscar.com.